Welcome everyone. How we doing? Oh fuck, we got Lambos. We got Lambos talking shit in here. Damn, did I miss the Lambos message? Nah, bro, my Lambos DM's dry. I haven't heard from Lambos in 9 days, dude. That guy don't even fuck with me no more. Welcome everybody. How we doing? We have a good day. All six of you. Hope everybody crushed it except Zane. Zane, what'd you trade today? I saw you. I saw you chasing that one. It was on a ripper. What's up with that? Why are they doing that? Lift was nutty. Look at that lift had it almost 6% day. That's wild. What was making these names? What was making these names run today? Do you know? Lift broke out. That thing's got another buck in it. Above there, that'll get wild. Wow. Uber working on it, huh? Look at the last time I was trading Uber. That hurts, huh? Oh, this thing looking pretty money here. I mean, there's that one, but it's kind of ugly, huh? Things wild. Oh, dude, Carvana. I love it when I come to a chart and there's just something stupid on it. Wow. Yeah, that thing could get freaky. Dude, above 90, that thing's gonna go wild, I bet you. Where are we at here? Yeah, above 90, that thing's just basically gonna just gap to probably that 9,700 area. What's that thing up? A couple 1,000% on the year or something? Let's see, low of 355, 2,113% from the lows. It's a ripper. Welcome everybody. Hope we're all doing good. Hope we all had a good day. Man, I paper handed some of these things today. Dude, I bought them here. I trimmed like here. Then I held one and then we got that push into the end of the day. I was like, I'm out. And I had them for 17 bucks. They ran to like 80. I never trade any of this resort stuff. He always hits the travel trade. Ooh, look at him. He's thinking about it. Where there's SMAs at. Welcome everybody. We're just messing around, giving people a few more minutes to show up. It's got the 20-day. I mean, yeah, there's basically like no risk on this trade. You're gonna get long. That's kind of really the only things that care about are these highs and lows. Probably that. Above that 20-day and 101 also, I mean, if you want to pay the premium and try to catch that breakout if it's going to come, that'd be a nice spot to do it. Otherwise, long here, tight stop under the 50. I mean, God, what is that? A buck? I mean, you could give it a buck down. Or if you want to loosen that stop, just size small and be ready to add down here. Oh, don't say Google big move down, man. I'm swinging long. Google did. Oh yeah, see? I hit it Hit it off 147 area twice today. This one paid really nice. That was a quickie. That was like instant gratification. But then hit it again down here into the close. Nice little push out of it. Big sell down on news. I hate to hit it on uh you know long after a news day like that. But when we're just down at these lows, this 147 down here, to me, that having that buck risk to the downside, I'm long down here over and over again. Dude, Zane, I wouldn't say he trades him a lot, but he just has such a good finger on the market of knowing what's gonna move, what like where money is rotating. He tends to just catch that travel trade when it comes. He trades Uber and Lyft a lot too, or at least he was. I've been meaning to, I wonder if Rev's in here. That X drop, dude. That is crazy. That was like such a trade. Just an accidental print fest right there. Just a second. Wanted to look at this one too. Dang. Yeah. Dude, Rev sent me this one. Is Rev not in here? He's normally in here. Rev sent me this one. I really wish I would have gotten that trade. Nice little buck move on Verizon for a cheapie. That's a print fest. It's a little bit better. I mean, I don't want to say better. It's not like, I mean, it's similar to T, but it makes bigger moves because it's worth more. I mean, when you're trading something 40 bucks, it's a lot easier for it to move a buck than something at 17. So you don't, it's not as like excessive on how you can finesse a T contract with that ridiculously high gamma and stuff, when you're sitting right at that in the money price. But it's still pretty good and definitely very tradable. Gets plenty of volume. But I still like trading T more. But I haven't been hitting it, man. That thing fucking bit me in the ass a couple of times, too many. Boeing, let's check it out. Everybody wants to, oh yeah, I forgot. I'm already sad about this one. I mean, that was like the double bottom of a lifetime. We talked it in class. One person hit it. I don't remember who that was. I don't remember who it was, but somebody just like got long at 177 or something. It was like, oh, I'm just gonna see if I can catch the bounce and caught the 10 buck ripper. But for me, no, this thing is just so like hammered with bad news. Everything about it is bearish. I mean, I'm sure there could be a nice upside trade off of it if you wanted to catch it. But to me, I'm not like overall bullish on this. Me and Empanada talked about it last week in class, so somewhere back here, and we basically both just said, like there might be a trade to catch a bounce, but it is going to go to this low, and it ended up going, I mean, almost right to it within cents. So I'm definitely not going to be rushing into the long trade on Boeing. I would almost like another test down here to just really reduce that risk on it. Because now, if you're trying to long Boeing, your stop has to be $5-6 below you to be any sort of reasonable. So okay, well, welcome everybody. I see people requesting charts. We aren't really doing charts tonight, but I don't know how long taking or building the trade plan is going to take. And so we can get into some charting at the end if people are still around and want to look at some things or some trade ideas that they have, like Boeing. I should probably look at it on the 4 hour and stuff, but tonight we are talking trade plans. So thank you everybody for being here. Dirty River, happy to have you. This is, one one of my favorite things to talk about. As people know, over the last, I don't know, well, it was supposed to be like 3 months of classes, but I did some covering, so it was about a month and a half. But over the last month and a half, I've basically been trying to do, explain how I trade everything, from like we started with basic support resistance, went into some indicators, talked trading psychology, talked a little bit of contract selection here and there. We're going to get more into that tonight. Any of the indicators that I use, we talked about how to chart the opening range, understanding the opening range. So basically every single thing that I use to trade every day, long time frame analysis, all of that stuff. And so now we're coming to basically the end of it. Next week is going to be a Q&A. But this week we are doing building a trade plan. And so tonight, I'm going to be going over how I build a trade plan. Before any trade I take, what do I think of? What are some things that I'm looking at? Because, I get a lot of questions in my tab. Obviously, I'm not like alerting things in there. It's more for the people who understand charts to say, hey, this is where you might want to take a shot. It's hard in my tab because, I'm really giving you a chart in a sentence. So you kind of got to know what you're looking at. But rest assured, when I am posting anything in there, I am likely taking a trade. And it's going to be well thought out. You might only see a chart with a sentence, maybe you're just seeing a trend break, but we're going to talk more about the other things that I am looking for to make me want to take a trade. And so with any trade plan, there's 3 things that need to be considered. We're going to have a few more categories than that we'll talk about tonight, but the 3 main things that you need to consider are entry and stop out and your profit targets. To me, the most important aspect of all of that is entry. All of you have heard me say it a million times. If your entry is good, you can turn a good trade great. If your entry is bad, you can make a bad trade terrible. So entry is everything. The next one, where you put your stop out. Everybody, not everybody, but a lot of people, when they're trading options, they get really, really caught up in the profit side of things. All they care about is, how much money they're going to potentially make and blah, blah, blah. And, trying to guess where stocks are going to go. But really what people should be focusing on is how much money am I actually risking in this trade? Because profits are great. And if profits come, that's why we're here. We're trying to make money. And if profits come, then great. There's a set of rules to follow on that end too. But the more important side of that is losing money. Everybody's guilty of it. Everybody's held contracts to zero. Everybody's held trades longer than they planned on stopping out. We're going to talk about the things that I do to really control any of those things. You never want to go tilt when you're trading options. Like if you got the calculator out and you're dividing the price of an option by how much money you have in your port to figure out how many you can buy, you are not on the right path there. So we're going to talk pretty heavily about stop outs, then get into trade management, what to do when you're in the trade, and then finally profit targets. They're super crucial to trading, and I'm going to kind of go over how I trim contracts. I wish more people would trim contracts. Most of you in here see my scalps. That's obviously not all that I do. And so we're going to go a little bit more into, some of those trades that you're in long enough that you're managing them. You aren't looking for that quick 20% pop, 15% pop and getting out of the whole position. So we're going to get into trade management. But as I said, one of the most important things that we can do in any trade is have a good entry. And so today I'm going to pull up a chart that I was trading. It's a funny one because it is kind of breaking my rules. And so we're just going to do, oh yeah, I got to save that one. We're going to do a new one of these. We're going to clear the drawing set. And we're going to do, everything that I have taught you all to say, everything that we've learned. Hey, Mike, how you doing? Everything that we've learned over the past month and a half, we're going to do all of that tonight along with building our trade plan. And so first thing that we're going to do, as always, I love to start on the longer time frame. You always need to start on, long time frame analysis and start thinking about, what is this stock that you're trying to trade doing? Is it consolidating? Is it on a run? Is it dumping? What is it doing in the big picture? You always want to take that into account. And then that's where you want to find your really, at least in my opinion, your really important levels. And so when we look at a chart like this, obviously, we had this big gap down off of earnings. You always want to kind of take note of those. They don't always fill. As you can see, sometimes they fill partial and then sell off a bunch more. Sometimes all you get is a wick that fills it. But you always want to take note of those. And then you want to take note of any highs that you have around. You also want to take note of the lows. We aren't concerned with any of this down here right now, so we aren't even going to chart those. Then you want to get into, how has the stock been trading recently? And so we can look at this chart right here and say, we've had a lot of bounces right here, and it's consolidated here and bounced and bounced and bounced. So we can kind of look at this chart and say, we don't want to have any interest in being short down here because the stock has bounced over and over again. If we go back to that daily time frame, we can kind of look at this and say, hey, we got a nice little area right here where that's probably a good place to be looking to get long. So we have our supports, we have our resistances. If we want to look on the daily, I always like to take note of trends. And obviously right now, we have a big breakout going on Google. Typically when you get a breakout, you get some consolidation. So we know we aren't looking for huge moves on Google right now, but we know we can take pretty high risk low risk, high reward longs down here and low risk, high reward shorts up here relatively comfortably. So that's what I was looking at going into the day. Obviously, most things had a very nice push in the morning. However, then we got lawsuit news, mostly pertaining to Apple, but they also threw Google's name in there. So we had very, very big selling on the day. It was, while most things were having, relatively decent days, Google was getting just smoked right off the bat. So the next thing we want to look at is, pull up any of our indicators. So we now know, obviously trend is strong down. We had our one level up here. This offered a great short. I didn't take it. I started trading a little late today. And then about 7 o'clock or so in 7 o'clock on West Coast time, about 7 o'clock when this thing started selling off, by the time I saw it start selling off, read the news, we had already dumped. So thing that made me interested was, as all of you know, this hourly 20 right here. So I watched the hourly 20 basically get sliced through. We know that if we're above that, we want to be bullish. If we're below that, we want to be bearish. However, our target would have been this 147. So now we get to discuss entries on this trade. And part of building the trade plan is always the entry. It's the very first thing that you should consider. You should know, where do I want to get into trade before you are in that trade? Because if you just start buying tops of candles, short and bottoms of candles, trading these first few minutes, 15 minutes of the day where you just have volatility up and down, and you're trying to, big green candle, it's breaking out, I'm buying calls, or, they're going to sell it, I'm buying puts. Never going to work out too good for you. So we know we've sold below the hourly 20. We now, for me, we've looked at the big picture. We saw Google on the daily. We know where it likely is going to bounce. What I always recommend, look left. If you want to know what the stock is going to do to the right, look to the left. And we know when we look left, there is consistent bouncing in basically the 147 to 146.50 area. So now we know our support and our resistance, which is, and I'm going through my checklist that I always go in my head. Big picture, we're at a bounce point. Look left, we're at a bounce point. We're now at our support. And you don't buy puts at support. We know that this is going to be a strong area to be in. You don't buy puts at support. Then you want to take note of your EMAs and VWAP. To me, those are very important things to trade, and they should frequently be used as targets for a trade, because you know that the market is likely going to react at them. Maybe it breaks above them, maybe it breaks below them. However, use them as your price target. And always take note of where they are when you're considering any sort of entry, because we know Google is in a downtrend. We know it's coming to support, so we're going to look for a bounce. However, because it's trading in a range and it's in a downtrend, we don't want to look for a breakout or a reversal or anything like that. We want to look for a move up to a logical place. And so what I always tell people to do, and this is, the Shark said it best. You want to look at the bullish and the bearish side of all trades. And then decide, is your entry worth it? So we now know that we have big picture at a bounce point. We're at strong support. We're working on a big trend breakout, on the daily. So now we have 4 nice bullish things for us. Well, now we have to look at the bearish side. We have EMAs and VWAP above us, so there's definitely a bearish thing. However, it's one bearish thing. So we have 3 bullish things, 1 bearish thing working in our favor. So at this point, we know we probably want to try to play the bounce because, maybe we reject an EMA if we bounce up there, but we're looking to hit we're looking to catch a bounce. So for me, I even get a throw on because I trade it, the opening range. The opening range has been set at 8 o'clock. We know that typically it's not going to break. So for me, I even get to throw another thing in the category that helps me be bullish. So now I have to ask myself, where do I want to enter? And I want to enter at this 147 area. So I know every bit of information I just gave you, I know right here. As soon as this is breaking down, we still know where we are big picture. We know where the trend is way below us. We do have EMAs and VWAP above us. Trend is down on the day. We know where the strong support is. We know where the likely bounce point is. And we know where not only our tight stop, which we're going to get into soon. When we get into the stop outs, we know where our tight stop is. It's a close below 147. Any sort of close below 147 with any sign of strength, we're out of this trade. Our wider stop, and we're going to get again, we're going to keep using this chart for the explanation as we go through, building this trade plan. Our wider stop, where we're getting out of the trade, no questions asked, is down here. So this is going to be our maximum risk. So I wanted to, oh no, I might have shared the wrong screen. Let's see. Do you guys see what I just put on the screen? Oh, I forgot. I can click on this thing and see. I'm guessing you guys don't see what I put on the screen. Well, we were going to go into contract selection. Oh, hold on. I see I got a couple questions. Mike, I would enter because it is at my support level. It's not a resistance level. This is support. So you have to think of it as support. Josh, yeah, when I say hourly 20, so that's this ugly yellow line right here. And what this is an hourly 20 EMA, but I have it, this is a 5-minute chart. So on this 5-minute chart, that's why it looks stair-steppy. That's because this is an hour of time. And so since an hourly 20 EMA only updates, once an hour, it's flat for a whole hour until it makes the adjustment, whether it's up or down. So if we go to the 20, it's just, or the hourly, it's just a line. But if we're on the 5-minute, I always like to take note of where it is. That's something I picked up from Al Brooks, obviously. It's about the only indicator you will ever see on his chart. He does like VWAP too, but that hourly 20 is always on his chart, and it's just a really, really powerful tool. Yeah, you see the Google chart. Mike, I have no idea if there's an indicator that charts support and resistance for you. I wouldn't trust it anyway. I would much rather do it myself. Okay, so I'm gonna try something right here. I apologize if this ends up being a bad idea, but I'm hopeful Do you guys all still see my screen? And do you hopefully see? Oh yeah, look at that. We're there. Okay, so sorry about that. Nice. I'm happy that worked out. I wasn't sure. Okay, yeah, and I'm on my right port, so it doesn't matter if something pops up. So we now know our entry. We now know where we want to enter the trade. We know all the reasons that we want to be in that trade. We have a rough idea of where we want to stop out. And so now we go into contract selection. And this is something that I wish more people would do. Yeah, good question. You can use the 240 if you want. I just like this one. I don't know. You can use the 240, and for anybody who doesn't know, that's just a much higher, it's a longer EMA. And so it's gonna, I don't know if 240 is right. Double check that. But you can always do a big number and it will give you the same idea. But I just like this hourly 20. I'm used to it. I like that flat line. But that's just me. Okay, so contract selection. We go, we're trading Google. And Google's not a big mover, I mean, obviously this is a big move for Google, so you typically want to be trading pretty close to the money. Ignore the open position on the little small port on Google. This is hopefully to prove Zane wrong. And so we have Google here. We know that our entry is at 147. So we want to be trading the 140. Oh, Zane's still here. We want to be trading the 148s. Why? Because it's reasonable. It's $1 out of the money. And that is a reasonable move that Google could make. Sure, you could trade the 149s, which I know I'm in, and it's dumb and blah, blah, blah. But it is a much lower probability of giving you money. The percentage will be higher, but it's going to be $4 to make your 20%, or you're going to make $4 and it's going to be you're up 20% or whatever it is. $6 and you're up 20%. So what people need to do is look at this column right here. This is delta. It tells you if the stock moves $1, how much will you make? And so we can look right here on our Google chart. We'll bring that back up. We can look right here on our Google chart. We know that we're basically looking for this 9 EMA. That's the bounce that we're looking for. So we're looking for, give or take, a 75-cent move up. That's great. If we know what our potential reward is. We also know our stop is right below us. So how much are we risking? We also know where our other stop is, our hard stop, we're dead wrong, we got to get out of this trade. Well, delta works both ways. So we can look at this and say, I'm going to enter at 147. Absolute worst case scenario, I'm losing 40 cents. So if we're trading these 148 contracts and they have 47 delta, then you know that you're only going to be risking $15 to $18 a contract. I'm sorry, I did that quick math in my head, but 15 to 18 bucks a contract. And that's where your hard stop is. Worst case scenario, that's how much you're losing. This is what people need to pay more attention to when planning their trades. I now know exactly how much risk I have on this trade. So if you have a port where you only trade 1 or 2 contracts, you can say, well, the most I want to risk on this trade is 50 bucks, we'll say. So you can comfortably buy 2 contracts, you're risking $36. You're still well within your risk range. And then on the upside, since you're looking for a 75-cent move up, then you can be looking at, substantial. And there's more to this because this number will be increasing. But you'll be looking for 35 cents or $35 profit, risking $15 to $18. So a very, very nice risk reward trade for just a small move. It happened to come in 1 candle. Didn't necessarily expect that. But we can know all of this before we enter the trade. So now we can be right up here and the contract price is going to drop. We aren't going to know exactly what they're going to cost us when they get down here. But you can just have your limit order waiting, sitting there, ready to go at 147. Then you'll know how much you're going to spend. You're going to spend about 55 bucks to potentially make 36 profit. That's a really, really great percentage trade. Same with on the downside. You know how much you're risking. And so learn about the delta, look at the delta. I always encourage people, if you don't know the contract you want to enter before your entry comes, then don't just dive in. There's times like if you're trading SPY, if you're trading those other things and you're looking for a buck move, a $2 move, then you can start to maybe go a couple dollars out of the money. However, if you're looking for a quick bounce, take advantage of this. Because your delta is going to pay you more. You're going to make more dollars, and then you're going to make more dollars on a smaller move. You're going to know your risk, and you aren't so far out of the money that when it dips and comes back up, you aren't break even. When you're this close, you will end up closer to break even. Good. Nice, Josh. I'm happy to hear that. I mean, I love looking at the Greeks on contracts, but you gotta look at delta before you enter any trade, because then all of a sudden you know how much money you're gonna make or how much money you're gonna lose. And as we know with trading psychology, that's where people start freaking out. And if you know how much you're risking, then even if you get stopped out, no big deal. You knew exactly what was on the line. So it's key. Uh, Very good question, phone. Is higher delta better? Higher delta is a double-edged sword. It will cost you more, going into money or whatever. Like you can see, delta's huge on these in the money weekly contracts. It will cost you more to have a higher delta, but the important thing to always remember is that higher delta is great when you're making money. It's not great when you're losing money. So you can see right here, this contract right here, and all contracts, that's a part of the equation of it all. You get a big move against you and you are going to lose a lot of money quickly. The percentage on that contract is going to drop rapidly. So I think, and this is a complete generalization, but if you're anywhere in that $35 to $40, $45 delta, great contract for scalping small moves. If you're looking for those bigger moves, like I said, you can go a little bit more out of the money, get that higher percentage, trim contracts, blah, blah, blah. But that 35 to 45 is kind of the money zone for any sort of scalping or day trading. How did I get the 18 downside per contract? So again, I did that math in my head, but we know that from right here, we are going from 147. Our hard stop is, I rounded to 146.60. So 40 cents of downside. When I look at the delta here, we have 47 delta. And we know that a delta represents a $1 move. So if we get a 40-cent downward move, and I'll do the math real quick so I'm actually accurate. If we get a 40-cent downward move, we will lose 40% of one delta, which is going to be $18, because 18 is 40% of 47. It's likely going to be a little bit less, maybe more. I mean, Greeks are ever changing due to gamma, things like that. But nice ballpark, 18 bucks a contract. And that is only for if the trade really goes against you, which is now what we're going to get into more. So we've done entry. Just to recap real quick, we've done entry. Look at the big picture, look left. Are we at support? Are we at resistance? Where are trends? Where are EMAs? Where are VWAP? Where's hourly 20? Where's the opening range? All of those things. We've now analyzed, is there more bullish or is there more bearish things? And now we know if we're scalping calls and we're looking for a bullish trade, we have more things in the bullish category than the bearish category. So now we know what contract we want to be in. We can know all of this while the stock's going down. Remember, this all goes back to patience. Patience is absolutely key. The people who entered calls early smoked. The people who thought this was the bounce smoked on calls. You wait and you wait and you wait until your parameters are met. And our parameters are met right where they should be. So now we've picked our contract. We know all of that. So now comes, like I said, in my opinion, the most important part of any trade, stopping out. Um, this is how you protect your port. You know, you'll see people joke about it on trade floor and blah, blah, blah. Uh, stopping out saves your port. You know, it is the only thing that keeps you from going to zero. And so it is, in my opinion, one of the absolute most important things you can pay attention to. And I get a lot of questions about it, because you know it's hard because I've traded longer than most people, and so I've sat and I've stared at charts. I kind of have an idea of what charts want to do. I like watching price action. I like reading candles, blah blah blah. However, when you're stopping out and you need to know where you're stopping out before you enter the trade. No questions asked. If you don't follow those rules, then that's how you start losing your port. When you're asking people for advice and you aren't taking it and you're just holding bad trades, you need to stop out of those trades. And so what I always tell people to do is admit you're wrong. Don't move stops. If you're getting stopped out too much, then analyze your charts. You're doing something incorrect on your charts. Never blame a stop out. Oh, I wish I would have held. People hear me say it all the time. If you got a trade that goes, 30, 40, 50% against you and comes back to green, it's not a good trade. You got saved. Your entry was obviously terrible, which is fine. Hey, we're all learning. We all take bad entries sometimes. We all get smoked every once in a while. It's just part of the game. But if all of your trades are going, 30, 40, 50% against you, or you're having to hit averages on most trades, something's not working. You need to change something. Like I said, we all stop out of trades. It happens to everybody. You need to just you don't have anything to prove. You're here to make money. Sometimes you lose money. So just admit you are wrong. It's one of the most, it's a very understated trader ability. Most people are terrible at it. So if you're aware that you aren't good at it, then you need to work on, setting stops and not moving them. So that's what we're going to get into here. We know where our entry is. This is big blue circle. I'm going to remove it because it's here. So our entry is here. If you have orders waiting, you're getting picked up. When you're within a couple cents, you're getting picked up, especially if you have orders just waiting on the way down. So you get picked up. Your whole thesis on the trade. You're basically looking for maybe a scalp to the opening range for the first one. And finally, final target, this 9 EMA. Well, where do you stop out? I like to do it. I have two stop out places. My main stop out, I'm buying calls here because it's support. We know it's where the market's been consolidating, blah, blah. We've been over all that. We're buying calls here. So my stop out is any sort of close with strength below here. If you have a big red bar closing near its lows, some things like this below this level, candles like this below here, you stop out. In an ideal world, it's only 5-10 cents below you. So that is, 10, 20 cents, whatever it is, it's small. It doesn't always work like that though. So I describe this stop out as your mental stop out. If we're getting a candle close down here, 10, 15, 20 cents below that level, you want to stop out. If you're getting a wick, you likely don't want to stop out. You want to hold through that. And so that's why I don't use a hard stop here, because you might get this situation. I get asked it all the time, hey, I was in a trade, it was going good, but my stop was too tight. So I got stopped out and then it kept running. Well, that's where using a mental stop can really help you. And it works for trailing trades as well as just stopping out of the trade that you're in. So that is your mental stop. I always describe it as your perceived stop. It's where you hope if you're going to stop out of this trade, that's where you're going to get stopped out. It's just ugly candle down here. Well, you also need to know somewhere you're stopping out. Like it doesn't matter. Like even if it's going to take a rip and bounce offer right there, you stop out. It's as much as you want to lose. This is where people struggle. They might be in this trade and then it goes way against them. It's way down here. So it's like blown out the stop that they planned on using. So they keep holding and then it just keeps going against you and you keep losing more and more money. And I don't know why people do that all the time. It's just kind of a bad trader's habit. But it always goes back to admitting you're wrong. So this is something that I always do. I think most people should always do. Have a hard stop where that you aren't going to adjust it. I mean, you'll move that stop into profit once you're there, which we're going to get into next, but have a hard stop where you say to yourself, I am not losing like more money than this. That's like you aren't gonna risk it, you aren't gonna do anything. So you put your hard stop down here. We know this is a pretty big level. So this is a point where I want to explain, risks that I think are worth taking in trading. So we know this is a strong level. Obviously, we can go back to the daily. We can say to ourselves, "Hey, if we're breaking below here, we're in a bad way. We're gonna sell. We're gonna go down. We're gonna fill this low gap. We're gonna go down to this wick. I don't want to be in the trade that long." So if our levels are good and you trust your levels, we know that there's a chance other people are watching this level. So when you're setting your stop, and this is mostly for those think or swim people. Webull doesn't work like that. Obviously, Robinhood obviously doesn't work like that either. But when you set a stop on Active Trader, it puts a line on your chart. So we know this is our big level, 146.58. It's where we really do want to stop out. I'm never going to put my stop up here. I am going to accept the additional risk and I'm going to go a little bit below that level. Yes, without a doubt, this is going to add another $2-3 of potential loss on this contract. However, if they wick it and bounce it, which you can kind of assume they're going to down in this little zone, you don't want your wick getting stopped out. So I personally will always take on the couple extra bucks of risk for that. However, if you have a smaller port and you need to just respect your rules, you need to be right up on this level because this is where you are wrong. So always respect that stop. Set that hard stop. The second stop is what I always describe as a protective stop. It is there for when things have just gone haywire on you. And so when they go haywire, you get out of the trade. You don't want to be the one on trade floor asking, hey, I'm down 60%. Should I hold? No, you should have stopped out a while ago. So leave that stop. Don't move that stop. Hopefully your perceived stop works for you. If it doesn't, then great. You still know how much you're losing on the trade. And that's what is always the most important thing, like if you got a small port, like I said, you're willing to risk 40 bucks or whatever. You can only trade 2 contracts on this trade. Maybe you have a bigger port, you're willing to risk, 200 bucks. Well, you can trade 10, but manage it accordingly. So now we get to go into the next side of it. We've covered entries, we've covered contract selection, we've covered stopping out, hard stops, mental stops, that perceived stop, the one you hope you get versus the one where you got blown out, you're out of the trade, always know those stops before you enter any trade. If you know entry and you know stop out, you are miles ahead of most other people. So now we want to look into what happens if the trade goes our way. So this next little part is going to be managing your trade and then setting profit targets. And so with trade management, it's going to go back to the two things that, are always like, they're always the most important things. Know when you're right and know when you're wrong. And the most important part of trade management is trimming at your profit targets. That's what matters. That's you need to be trimming contracts. How many you trim is up to you, but it is always important to, in your mind, when you are planning these trades, knowing what percentage you're going to make on the trade. How much should you be trimming? Just as an example, we knew that this contract, if we buy them here, a bounce to any of these recent highs is going to be paying us 20%, 25%, something like that. So if we're in 5 contracts, we can sell 4 of them and now have a free one at 25%. So always be trimming at profit targets. And how do I set profit targets? Like I said, for me on this trade, which this is actually a trade that I took, I entered down here. First profit target, close, right here. I mean, this 20-cent bounce is going to pay you 10 or 15%. So if you have 10 contracts, you can take off 4 of them. And now you have basically a free one. I mean, you have one that is basically free, and then you have some left. My next trim was at this previous high right here because I knew that the market had kind of broken down and had failed to break back above there. At this point, I've taken a trim here. My stop is now at the opening range. No questions asked, and that's what this blue line is the low of the opening range. And because that's something I trade, and that's part of my plan, obviously, first target. Second target is recent highs. Final target is the 9 EMA. The trend is down. We're fighting the trend. We had more bullish things in the bull category. So now we trim at the 9 EMA. This came in one candle. It doesn't always work like that, but it did some stuttering. Like I said, I was in this trade. Well, now that I've taken another trim up here near the 9 EMA, and I'll always trim, even if I'm 5 cents off, I'm trimming that thing, that's close enough for me. My stop moves to here. This was, I think when I took the trim, it was like 35%, 36%. So I took all of them off but one, and then this last one got stopped out at 30%. So I managed the trade to keep it green. I knew where my stop out was. I knew where my entry was. I knew the risk I had on the trade, and I followed the plan. And then I stopped out. And anybody who chased this move smoked. They wanted profit, kept getting blown out all day long. And that's just part of it. You need to know, and on the way down, we know that our final target is the 9 EMA on the way down. So when we're looking for entries, we're looking for profit targets, we're looking for our stop outs. Over here, we're starting to look at contracts. We get into contracts here, we know obviously opening range, that's been said, it was set back here. So opening range is set, we know that target. Previous highs, we know that target when we're entering down here. 9 EMA, we know that target from the second we started looking at calls. We know downtrend day, 9 EMA is the target for any sort of call bounce. So we know all of this before we enter the trade. Then these contracts, like we said, we ended up making about 40%, 50% on the ones we trimmed up here. And we knew we were going to make that much because we looked at the contracts before we got in. And so knowing all of those things before you enter any trade will do a very, very good job at emotions. It makes it so all of the guesswork is taken out of any of your trades, because your entry, your stop out, your profit targets. Nothing is left up to guessing. That means you don't have to be the one on Trade4 saying, oh, can Apple keep dropping? Can Apple keep going? You have your plan. You know what you want it to do. So you sit and you patiently wait. And when you take that good entry, you take the good entry and you're good to go. You've removed any and all stress from trading. So that's the best thing you can do. You can even see it. I'm liking that we're using Google now. You can even see it again because this was a great trade, quick, happened faster than happened faster than would have been expected. But then anybody else trying to enter trades, even these opening range bounces, just not really paying. This one could have paid, tricky to get in there, not quite a fast enough move. And then the only other reasonable entry was down here. And this one I want to talk about because you know, our trade plan here at this 147 is a close below that level is a stop out. However, this candle right here closed 4 cents below our level with a little bit of a wick. So for me personally, and I'm just trying to show you something that I would view on here, and I did view on here. And I actually entered on this candle, so this one was not ideal. But this candle is not a stop you out candle. It did set a new low, but it's closing. You can tighten up your stop and have it just below there if you think it's going to break down. But this again offered a very, very nice entry. A candle closing 4 cents below that level. If you were down $1, I would be surprised. So another very, very good entry. And you can see people got chopped all day long on Google. And if they would have waited for the one good entry and the second good entry, both of those trades paid you very quickly, very, very well. And so knowing all of our same ideas here, we're entering here. We're targeting the 9 EMA, tiny little bounce, 20-cent bounce. But if you're taking this risk, you still know everywhere that you want to trim. Profit targets, recent highs. It's all the same. This one ended up pushing a little bit more, made you a couple of extra bucks. But entry here, trim at the 9 EMA, trim at the opening range. Obviously not a big move, 20-cent move, but you didn't even see red. 20-cent move paying you 1/5 of your total delta. So you're going to make 15%, 20% of contract. Final one's up here paying you 30%. And then you can move your stop there, but obviously you start breaking these EMAs to the upside, manage that trade. Probably bump the stops to here just to protect that profit, and you're good to go. And you can you knew this entry all day long. You just waited for the one good entry. So that is it. That is building a trade plan. That's everything I do. Before any trade I take, I look at any and all factors that I can. And so that's it for me. Hopefully, if anybody has any questions, I know it's kind of a lot, but I think that you should likely be putting a lot of thought into your trades before you take them. There's a lot of people out there that want to try to, think every single candle is an entry, but I'm really hoping that today was one of those days where, you see what patience can do for you. Any of the people chasing calls, smoked, chasing puts, smoked, unless you wait for the one good entry. And so that's, like I said, main thing I wanted to really just get across to everybody, know those entries, know those stop outs before any trade you take. If you don't know those, you're really setting yourself up for failure. And like I said, they make a good trade great, and they make a bad trade terrible. So just try to know, all of those factors. And then a final thing I like to tell people, my DMs are always open. If you're looking at a trade and you're like, oh, I want to take this trade, send me the chart and ask me. And I guarantee if while you were typing me out a message, if you do, if you do, type out all these things we talked about, type out the reasons that you're entering, type out where your stop out would be, type out all of those things. You realistically won't even need, you won't need my advice, because you will have all of your answers. If you build the plan, you don't need my advice. I'm happy to give it, but if you do it yourself, you'll quickly realize, hey, this is pretty easy. This is just the 5-minute, Eric. And, this works on all time frames. It doesn't matter what you're doing. Analyze these things, you know. You can look for these, 15-minute candles wick down to here. Love that entry. It frequently gives a really nice bounce, you know. Oh, great. We got Norvin here. No, Norvin, we can't check those anymore. Oh my God, thanks. You were so funny. Uh, uh, so let's see if we got any. Right on, always sometimes. Thanks for being here. Yeah, Zane, keeping a trading journal, that can be great. It can also make you realize like, hey, I overtrade like crazy. Oh, we got Dark River here just causing trouble. Yeah, right on, Eric. Thank you. Zane. Yeah, I don't check yours. I got you muted. Nah, Lambos, we just need that Google gap up tomorrow. More than anything to tag Zane about it. Yeah, Dark River, shoot me a DM. Okay, well, if that's gonna do it, let's check out some charts. What's everybody got? What are we watching for tomorrow? Okay, God. Well, I'm only gonna show you one chart. I'm gonna show you where I told you to get into. And you didn't listen to me. Look at my VRT chart. Right here. I said, and this is before this breakout. I said if we break out, get long, I mean, obviously get long. And we're now $30 from there. So there's your VRT analysis. I mean, this candle is ugly. Hopefully we get, if it pulls back to 80, 79, 80, buy that, stop below, this 78, 80 area, keep that wider stop on it and look for that thing to run. As long as Google trends, that's all that matters. Ooh, snow. Well, I mean, snow right back into here. Nice. I'm actually happy about this one. People were getting all excited about snow, and I was like, "Oh, I don't know about that. If you don't see snow over 170, man, short that thing. Easy. I mean, it was in this range for a long time. Unfortunately, that was a nice entry today that could have been had. But middle of the range down here holds exactly zero interest in a trade for me. You could try to, you could try to play some off at 155. I mean, that's basically the center of it, but no interest in a trade for me. Microsoft. Good stock, that's for sure. Yeah, that 427. Yeah, I'd be buying calls on any dip down into here if Microsoft ever dips for you. Hard thing to trade though, just sitting there at all-time highs. Ooh, God, I bet this one pissed people off today. Set itself up for a move tomorrow though. I mean, I'd be buying the dip all the way down into here, looking for that bounce. Otherwise, below that 425, you might be able to run it back down towards 420. Yeah, 422.50, 420 area. Coke, should we really talk about that? No, Nando's got a trade running. I try to avoid that when people have trades. I mean, this one's another one. I mean, I can't tell you what to do here. I wish I could help you out here, iPhone, but I mean, don't bet against crypto, obviously. I mean, there's plenty of time to short and long this thing, but this makes things hard to trade. I mean, God, you got a $300 range in a couple of days on this thing. I mean, ugly candle, but they do love to buy off of here. I mean, that thing breaks 1600, you can scalp it to 1650 probably. I mean, at least at 1620, but those contracts are so expensive, man. This thing's hard to trade. Amazon, I'm long. I swung a couple Amazon calls today, but I got a bunch of time on him. I mean, this one's nice. Took the big breakout, giving us that retest back here, 178 area. This has been tricky for us. So really, I mean, you can dip by this thing all the way down to 177, in my opinion. But got smoked today, so I mean, I took that high risk entry. But I'm definitely not bearish on Amazon. I'll tell you that much. If we can get back into this trend, I mean, still even there. Let's see where these SMAs are at, probably miles away. Oh no, look at that. Oh yeah, I mean, if we got that trend 20 SMA retest, 175, that would be the spot to be long. I just want short things like this, Easy to be bullish on Amazon. Tesla, horrible stock. Worst thing ever. Oh, that's my level. I was wrong. Oh man, but I wish I would have seen that yesterday. Wow, dang it. I mean, horrible stock. There's no reason to be long on Tesla, in my opinion. Like I said, I'll be pretty surprised if we don't visit these lows. We took a nice bounce down here, but uh, just not where I have any desire to be long. I wonder where that trend from this guy was. Probably pretty close. Let's see if we can get that break of 175 in the trend. You can look to play that bounce. I'm sure people are trying to hope this ends up being some sort of head and shoulders down here to give it a breakout, which could play out. We get that, we get a nice shoulder form somewhere down to here, 168 area, something like that. And you might get a nice push out of it, but still not where I'm rushing in long. Apple. So another one, not rushing in long. Bad news, obviously, which I know everybody thinks it's like a big deal, but this is like I don't know, this is like the fourth time the government has sued Apple, third time the government has sued Apple for that. So we'll see what happens this time. Comes down to this 170 area though, I mean, oh, look, we still got Zane's level on there. Apple puts, he said that like right here. Oh no, maybe he said it right here. That was an epic day. But this 170 level, that's what I'd be watching. I mean, pretty easy. So yeah, pretty easy. And I thought it had reclaimed the 200 day. I was dead wrong. Yeah, it's not above the 200 day. But bounced this trend, short it down to 170. But at 170, man, you couldn't pay me to be short on Apple. I drew any levels that are on here. Oh, Disney. Yeah, man, that's one I'm sad I missed. Oh, look at that breakout. Wanted that one. That was a nice one. Look at that. How did I miss that? Man, that is nice. Where's it going to go from here? I trade Disney a lot too. I'm sad I missed that one. Oh, well, it rejected it right where it should have, but it gets above that 117 and you can try to run that thing. We could start push that 120 soon. Ooh, tricky spot though, man. Rejected right where it should have, huh? Man, could get to ripping above that. Big reject where it was though. How does Master Pump better than mining companies? Because why would you own a mining company? I mean, I've been sort of beating this. I've been beating this drum here for a while now. And we can just talk about it real quick. So in gold miners never perform like gold because they have costs and blah blah blah. So why would you be long on them when you could just be long on gold and make more money on gold? As you know, gold puts in bigger runs, bigger moves, blah blah blah. And so to me, there's no reason to think that that won't happen to the Bitcoin miners. I mean, if you're big money, you don't want to have you don't want to have your investment sitting in a company that, has increasing energy costs, is going to have their production cut in half next month. Like, why would you be long there when you could just be long on the Bitcoin ETFs and make a whole bunch of money with something that is directly tied to a Bitcoin position? So to me, no reason to be in those miners. They're still going to pump like crazy because that's what they do. But long term, I don't see those things keeping up with, the actual crypto trade. Marvin, we'll see. We'll see. Uh, I'm just trying to see if we have any real questions here. Reddit, there's nothing to chart on it. Yeah, Norman, MPC for the fifth time. We'll get there. Call, balls deep in coin. JP Morgan just on the rip of a lifetime, I know. So, God, dude, nonstop. I mean, Jamie Dimon's a genius. I don't know what else to say. I mean, this one was sick. XLF was like, what's that stupid? That just must be a dumb wick, huh? XLF was the easiest long. I even mentioned it in Trade Floor yesterday. It was the easiest long during that FOMC yesterday. I had a nice move on those things. Okay, coin. What do we got? I probably got some Norvin levels back here on coin. Check this out. This is from Norvin Banger stock. Here's a little Norvin level for you. This is where Norvin was telling us to buy coin. Look, coin calls from Norvin 63.4 banger stock. Here we are, 262. Let's see. Yeah, that 270's been tricky so far. That's probably the thing to watch, at least for recent times. 271, look for that push up there, and then I mean we're still way down. What do we got over here? I bet that 300 comes sooner than later. AMD. I mean, just right back in this chop box. Ain't no reason to be long on this thing till we get a nice close outside of here. But I'd love to see this flush back down 165 area, get a bounce off of it. It'd be probably a sweet short 172 down to fill this gap. Not saying it happens, but I'd want to see a nice, if we push above here, this thing makes such nice moves. And today, obviously, get long if we're getting above that range. But we have to see what it wants to do. NPC Narvin. I probably got some levels on that one from you too from a while ago, huh? Oh no, we haven't talked this one. Wow, look at that. I mean, I don't know what to tell you. Things flying. Sure, is this like miles into all-time high? Just the chase of the lifetime? Yep. Just another Narvin banger. Watch that 200. I mean, things like to get crazy. Okay. Oh yeah, I don't know. AMD and Nvidia both kind of they do, I mean they do move similar, but they do their own things. I mean, Nvidia chart looking like it wants more, just like always. Oh, I saw that this thing started getting smoked. I hope did not hold, of course. Dude, that earnings report was so good. Just great earnings after great earnings. It's insane. Yeah, you got it, Narvin. Look at that thing. Wow. What a dip buy on it. Just a 30-buck rip on it. That's insane. Look at that thing, dude. It has just like hardly been red. Why have we not just been long on that? Okay, thank you everybody. If that's gonna do it, I see a few people getting out of here, so thank you so much for being here. Great lecture tonight. Uh, hopefully y'all enjoyed it, learned something. Like I said, if you ever got questions, feel free to send me some messages. Yeah, right on, Rudy, Jack. Thank you everybody. Call, always sometimes. Thanks for being here. Oh, what up, Wiz? How we doing? Yeah, thank you everybody. Have a great night, all of you. Right on, everybody. Have a good night. Tomorrow's Friday. Be safe, and we will catch you all then.